Hello and welcome to Investing Confidential. A lot of talk about the stock market, Trump, uh, Bitcoin, AI. Everything's up on the news. The one thing you don't hear much about is real estate, which is interesting because, as I have been saying, I think the election November is a big inflection point for all financial assets. We're seeing the market gyrate, gold hitting new highs, but very, very quiet on the real estate front. And I think I know why, because there's no good news. And the news is about to get much, much worse. So I'm going to jump right in here. Here we saw the trend beginning, the beginning of the end, let's say, at the end of last year. Here's new housing sales in October. The trend continues. I mean, they fell off a cliff. These are new homes, fell off a cliff. Okay, so you're going to get real data and fake data here, all during this video. But here, this is the beginning. Okay, this is just the beginning, and it's continuing. If you look at all of 2024, which you'll see here, new homes, single-family homes. But unfortunately, there's something they can do. This is the reality. And you could see here, again, new home sales literally falling off a cliff, okay? And again, the trend continues into 2025. So what's happening? Okay, what's happening here? So here's some data, right? You got supposedly nobody's been selling until recently. You've got people have all-time high equity in their homes. You go to Zillow again. You look at these again. These are fake gains. They're what they call paper gains. They're not real gains. Try to sell your house and do a real gain, unless you're in a couple of unless you're in the New York area, Miami, or Florida. Even that's kind of falling. You're not going to get real value, Zillow value for your home. All-time high equity built up in homes. That's great, but it's not a good sign. Then you look here at homes relative, so the price of homes relative to rents. Okay, we're at all-time highs. Okay, we peaked out in the second quarter of 22, but we're going back, all-time highs. As you can see in the other peaks, what happened? Prices plummeted. When you have this kind of spike, you get mean reversion and prices will plummet. How far down? Well, look, according to this, if we would go back, like just a natural regression back to the mean, we're talking about a 30 to 40% drop in prices of new homes to get it back to where it should be. This is unsustainable. Home prices to rent ratio, unsustainable. And you look at here again, this is good data, I would say. You're now returning to the mean. Home price growth. Okay, so we look at and even this is too high. But home price growth exploded during the pandemic for a lot of different reasons. But now we're back to the mean. So home prices not going up as much as they should. It's like inflation though. The prices have already gone up a lot. Now they're going up less. So people think the problem is solved, but it's not. It's not. We need deflation. We need price to go lower. And that's what's going to happen. It has to happen. And here again, home price, HPA's home price appreciation. I think this is fake news. Okay, we're going to go much lower. Even this indicator is in this year, we're already down to 2.5%, which again, going back many, many years, is a low ball for home price appreciation over time. I think we're going to get negative at some point, but we'll see. But again, we are slowing dramatically in the amount of appreciation for single-family homes, and it's not much better in the multifamily, right? Condos, those type of things. You could see here, the builders are just not, there's no demand. What this tells you in this chart is there's no demand for these homes, for these multifamily homes. Construction is falling off a cliff. I mean, it's heading towards 2008 levels. Not there yet. But what does that tell you? What does that tell you? And you look at mortgage applications. I mean, look at this. This is relative to historical. Where are we right now? We're low. We're the lowest in, I think if we went back past 08, we're the lowest in 20, 30 years. People purchasing homes with a mortgage applications. It's a combination of, number one, rates are too high, but that's not really valid. I remember when I bought my first house, wasn't that long ago. It was, I guess, relatively speaking, it was long ago, but mortgage rates back then were 6%. That was an average mortgage rate over time. That's where they should be. Mortgage rate shouldn't be 3%. It's ridiculous. 6%, between 5 and 8% is where mortgage rates is steady, depending on the situation. And so we're at, historically higher than normal mortgages, but people have been so addicted to low rates that, that this is a problem. Plus, you have the housing is so expensive, driven by pandemic craziness and institutions buying up, which, I can go back many, many videos I've talked about this, institutions buying up the delta of the inventory. But it's a real problem. But things are starting to thaw. Okay, so here we go. We talk about price appreciation. But now we're seeing depreciation. We're seeing deflation in places like Austin, places like San Francisco. Now we're seeing it in Florida. And I'm going to show you why in a second, but we're starting to see, so things are thawing now. It takes a long time to revert back to the mean, but we're seeing signs of thawing around the country, especially where people were flocking, right? People were flocking to Florida. People were flocking to Texas. No more. They're leaving for a lot of different reasons. And we're seeing the end of remote work. It's not the end, but a crackdown on remote work, especially in government, where there's 3, 4, 5, who knows how many million people work for the government. Less than 20% go into the office every day. They're being forced. And then so companies are also forcing. So there's going to be what is changing now is prices are coming down, as you can see, across the board in the hottest markets. And finally, we're seeing supply. So let's jump right now into the supply. Here we go. Here's, one chart, National Association of Realtors. Again, this is fake news. I'm telling you right now. They're saying the inventory is going down. Well, I'm sorry, folks. The inventory is not going down. Inventory is not going down. Here's real data. Again, you could see it goes back to 2013, but if you look at the pandemic, 2020, we hit a low in 2021. We're coming up off the lows, especially in the high end, in the medium high end. We're coming up. So overall supply in the United States is heading higher. But what I'm going to do now is look at some specific housing markets, because I think it's very interesting to see. Let's look at one of the crazy markets, which is New York. Okay, so nothing's really happened with supply. Supply is still historically low, except in the high end. And again, we got to the lows around the beginning of 2022. Now we're spiking back up again in the high end. The low end is trending a little bit higher, but still around. New York's still crazy. So crazy. I wouldn't buy anything in New York. Still crazy. Then we look at Florida, Miami specifically, which again was a hot market. Again, the lows of 2022, as you can see in the chart, we're going up. Florida's going up. I think Florida, what I saw, may have the highest amount of supply they've ever had all over the state for a lot of different reasons, mainly because of people are sick of getting their house wiped out, a natural disaster and flooded and everything else. And so you're seeing a rapid rise even in Miami, rapid rise in supply. So let's look at some other areas. Here we go. Now we have Washington, D.C. Similar pattern. We bottomed out, pandemic. We're seeing a rise, especially in the high end, seeing the rise in supply. This is good if you haven't bought your house yet. It's not good if you're going to try selling. Let's look at another hot area, Raleigh, North Carolina. A lot of people move to North Carolina. It's cheap. It's nice. A lot of jobs. But again, housing supply going up. Prices are weaker. No bidding wars anymore in North Carolina. Prices are weaker. Okay. Here's another one, Nashville, another hot market. Again, high-end prices, high-end supply skyrocketing, middle supply, low end going up. We're now back to 2015 levels. Okay, so don't let anyone tell you that there's no supply. They're lying. Realtors lie. Okay, if there are any realtors on here, I'm sorry, you guys are liars. Let's look at San Francisco here. Okay, San Francisco on the lows, 2021, 2022, spiked up. We're seeing it supply being taken up a little bit, but the pattern is the pattern. Inventory is going higher. We are now above. Okay, look at this. When someone tells you there's no inventory, wait a minute. Inventory is above 2013 levels. The pandemic was an aberration. Okay, take from 2020, 2022, just take it off the map. We're back down to mean reversion. We're actually higher in San Francisco. But the landlords in San Francisco play the same game as New York, the warehousing apartments. I'll go into that later. And then we have Austin, Texas. I call this the canary in a coal mine. Everyone moved to Austin, one of my favorite cities. Everyone wanted to move. Got insane. Austin got insane. And now a dramatic shift. In all aspects, we are the highest in, 15 years. A lot of building going on, overbuilding. People saw there was no supply in 2020 and they started building. People started moving out. They couldn't take the hot weather, the extremes, the high prices. So the renters said, screw it, and they're going back. People in California that they couldn't take the politics, they're going back. So look at Austin. Okay, and we saw that previous slide with the price appreciation. Austin is down 12%. It's going lower. A lot of supply, boom, bust. I'm going to show you one last chart about interest rates. If you really think interest rates are going to lower to bail you out, they're not. The latest data tells you they're not. The Fed's not cutting any more rates anytime soon. And here's one of my favorite charts. These are interest rates going back 3,000 years. Okay, we had the most ridiculous rates ever in the 1930s, 29 crash, and recently, insanity, pure insanity. Now we're reverting back to the mean. What does that mean? That means rates are not going down. Sorry to tell you. They're not going down. They may not go to the roof, but they're not going anywhere lower. This is an aberration. It happens, once every 90 years, 80, 90 years. Not happening again anytime soon. So get used to 6%, 7% mortgage rates. And the only way things are going to get affordable again is prices are going down, and they're going down. So you're a real estate buyer, be patient. You're a real estate seller, you better sell quick. That's if you have any place else to go. But the real estate prices are not going back up again. This fantasy of, every year going up 4%, that's over. As I showed before, we're down to 2.6. We'll probably go negative. Like places like Austin, there's a lot of the only thing holding this up is New York. That's it. New York's fake. Warehousing. Things of that nature. But the real estate market for single family home in this country is prices have to go lower. The only way, because rates aren't going down. There's two ways for things to get cheaper or to get affordable. Rates go down or price go down. Rates ain't going down, so prices are going to go down. That's inevitable. So nobody's talking about real estate because there's nothing good. People only talk about good stuff. There's nothing good about what's going on in the real estate market. Showed you the evidence, the real evidence, not the fake evidence that the realtors show you. So if you're a buyer of real estate, be patient. If you're a seller of real estate, get nervous. And if you're an investor, be careful out there.